You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen, his website, thegoldandoilguy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim. Pleasure to be here.
You're saying the markets are acting just like the high-tech bubble that burst back in 2000. Maybe do the comparison for us.
Sure, yeah. The dot-com bubble, if you look at the NASDAQ, we saw that massive rally. And if we were to compare some markets here, there's some pretty interesting data that we can pull out of it and a potential major opportunity going forward. And of course, whenever there's a bear market starting in one area of the financial markets, that money's always rotating somewhere else. So there's usually a bull market starting somewhere else. So when we saw that tech bubble take off and we saw it more or less peak out in 2000, and on a technical standpoint, when you're looking at the monthly chart, the dot-com bubble burst on November 2000. And that month that market was technically now confirmed to be in a bear market is the exact month that we saw resource stocks, specifically gold and silver stocks, start a major bull market that lasted all the way till more or less 2008 before we had the next kind of equities crash. So it's really interesting to see how the sectors here are going to rotate, and I feel as though what we're coming to now with the current equities level in the S&P 500, the NASDAQ, I think we're getting to the point here where in the next few months we're going to see these markets top out, we're going to have a very sharp decline, and we're going to see a new bear market be born in equities. We're going to see a new bull market be born in precious metal stocks and metal stocks in general, and same with the energy sector. So it's going to be really interesting going forward here. But before we see, I think, a bottom in gold stocks and we see that whole sector take off, if we take a look at the energy sector a bit, we typically see energy stocks perform really well right at the end of a bull market in equities. And I think that's where we are in the U.S. equities market. We're just all the technicals, all the underlying strength of the market, the breadth, the market is climbing with less power behind it. We're getting all the signs that a market top should be happening sooner than later. And once we start to get a little bit more weakness in equities, we're going to see investors start to flow into the safe havens. And of course, the energy sector is kind of resource weighted, and usually we see resources do extremely well in the late stages of a bull market, which is where I think we're at. And of course, energy, we're always going to need energy. A lot of energy stocks pay dividends. They are very solid companies. So I think starting any time now, we're going to start to see the energy sector start to take off. And the charts look ripe for a very strong rally where we could see the Toronto Stock Exchange poke to new highs in the next month or two. And we're going to see the energy sector, XLE ETF, probably start to move higher here. And once it picks up steam here, we're going to see it probably run to new highs also.
Now, so many have predicted that it's going to be a quiet summer. Do you think it is going to be a quiet summer?
I don't. I think we're setting up for it to be the summer you don't want to miss. The way everything is set up, the market is so stretched in one direction. So many extremes are starting to build. There's going to be a ripple effect once the equities market or the U.S. dollar starts to crack and fall to the downside. We're going to see everything go haywire. There's going to be some massive moves this summer, and usually we see light volume. We see kind of the markets go into a summer rally. Light volume favors higher prices. It usually takes high volume to sell the markets down, which is why we typically see that have that summer kind of rally. But I think this is a year people are going to be caught off guard. A lot of people are waiting to when the market starts to crack. I know a lot of people are just going to be hitting the sell button and getting out. They do not want to ride a sharp move to the downside. So once it starts, which I think will be, really any week now, we could see the market crack to the downside. It's going to get really ugly, and it's going to be the summer you can make a fortune trading if you can be positioned properly.
Have people decided not to hold on to their cash and maybe get back in?
Yeah, that's exactly what we're seeing, actually. We're seeing market sentiment is more or less the same bullishness level that we saw back in the dot-com bubble back in 2000. It is at complete extremes, And we're seeing some really interesting price action. We're seeing the overall market breadth. Fewer stocks are moving up, yet the stock market continues to go higher. We're just seeing money continue to trickle in here, pushing the market higher. And we're seeing large cap stocks actually sell off. They're actually down more than small cap stocks. And we're just seeing big distribution going on here between the big money players seem to be pulling money out. And we're seeing the average investor, I think, pile into these, like the Russell 2000, the small cap stocks. They're actually, trading fairly strong right now, and we're seeing money rotate into these leveraged plays right when everything is getting very extreme. Like this is the last, you don't want to be holding these stocks. They're going to get hit the hardest. They're going to have the sharpest drops. Yet it seems the average investor is piling into all these small cap stocks, and they're unloading the big caps, which are kind of just, they're kind of underperforming. So they're moving their money to these riskier plays. And of course, we're seeing the record levels of margin debt for equities right now. We've never seen levels this high before, which means investors are using margin. They're borrowing money to buy stocks, and of course, they're loading up with small cap stocks, and it's going to be a disaster. But the truth is, this is how the markets work. It always leaves the average investor holding the bag at the end when everything drops. So that's kind of just the way it goes. But that's where we're getting. We're getting to that point where the average investor here, they're very bullish. They're borrowing money to buy more stocks, and they're buying risky stocks, and they're probably going to get hurt by doing it.
We'll have more with Chris Vermeulen right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Chris Vermeulen, the gold and oil guy. Chris, what's going to happen to gold, do you think?
Gold prices, they've had a little bit of a haircut recently, and just in the last week or so here, we've seen both gold and silver pull back quite a bit, but both of them are trading at a key support level. And until we see the equities market, the U.S. equities market start to soften a little bit more, which I think we're really only a week or two away from the markets potentially breaking to the downside, which if they do, I think we're going to see the bottom put in for gold, silver, and mining stocks in general. But if we see this market top drag out a little longer, which market tops always do, that means we'll probably see equities continue to grind higher. And as the price goes higher, investors become even more bullish, and they lose more interest in precious metals. So we could, depending which way the market breaks in the next week or so here, if the equities break to the upside and we see stocks go higher, we'll probably see another month or two of weakness in precious metals and gold. And if we see the equities market break to the downside, we're going to start to see risk capital move into these more safe havens, kind of going to protect themselves and move into gold, silver, and I think it could kickstart the resource commodity kind of rally here going forward, because people are going to want to get out of equities, and that equities bull market will be probably coming to an end. Money is going to rotate somewhere else that's got physical, which is commodities, which there is something tangible there, and they're going to park their money there as a safe haven.
What's happening with crude?
Crude oil price has been forming this beautiful bullish pattern that we've been kind of watching unfold for several months here. There's all kinds of different patterns from a technical standpoint. You could argue that we've had a W formation bottom, a double bottom, a cup and handle bottom. All of these are very strong bullish patterns, and they point to higher prices. Now, oil's been trading for the last month or so in a pretty big range. In the grand scheme of things, when you zoom out on the chart, it's a very narrow-looking range, but it's actually about a 10% range. We're seeing crude oil get pretty choppy here. It's down 2.5%, 3% one day. The next day it's back up 2.5%, 3%. It's just kind of digesting and trading sideways. And after the strong run that it had from March right up into May here, this is just a consolidation. And technically, we should see prices eventually break to the upside and continue to move higher. And of course, if you were to look at the energy sector, which is the XLE, which we spoke about a few moments ago, that sector, the price action on that sector is extremely bullish. It has formed a basing formation, a pattern, and it looks primed and ready to take off, where we could see the whole energy sector rocket to new highs. And there's some pretty big potential upside for just the XLE. We could easily see the XLE muscle itself. It's currently at about $77 a share. There's potential we could see it go all the way up and test the previous high that it put in last year around the $100 mark. So we're talking potentially, 25, 30% return in that ETF alone. And of course, if crude oil breaks out of this bullish pattern and starts its second rally, crude oil I think is going to run all the way up to around the $75 mark. And of course that's going to fuel this energy sector rally that I think is going to be the safe play, one of the stronger sectors you want to play in the stock market. If you're going to be in stocks, I think this is going to be the place to be as the rest of the market chops around and slowly tries to top out.
Now, so many people a few months ago were saying, oil is a bad investment. It's going to go down to $30 a barrel. Why didn't it, and why is it strong now?
There's a lot of arguments. It really depends on how you look at the data and what your horizon is. I don't really see it going down to that level. The way that energy stocks have been building this basing pattern, usually we see energy stocks lead the price of crude oil. Oil stocks, they bottom first. They've built this very strong basing formation that looks ready to go. Crude oil is just forming the basing pattern now, so it's getting to that point where I think it's ready to go. I think the next move, we see them both move together here. But, if we look at some of the data, we've seen about, 60% of the oil rigs in the U.S. closed down. And, you can argue that there's record production coming out of some of the other companies, but there's still always going to be some big demand for crude oil. And as soon as some of the supply starts to get eaten up and crude oil price starts to rise a little bit here, we're going to start to see, I think, a steamroller effect where everybody's just going to pile into crude oil and take advantage of this next run. And it's just going to be a psychological run higher, I think. It's not so much supply and demand when it comes to actual price of commodities. It's mostly all a psychological level. It's people don't want to miss out on the next rally of crude oil to go back up to $100 or $75 a barrel. It's just emotions, more or less, that move a lot of these big waves.
What does it mean for the Alberta and Saskatchewan oil patches?
Well, obviously that would be great, simply because it does cost quite a bit to get it out of the ground there. So if we can get prices a little higher so they can at least be making some money on it, obviously that will, I think, really bring back the energy kind of workers and get the economies going in those places.
If it doesn't follow that trend, what's going to happen? Because I know they had such a labor shortage in the oil patch. Will a lot of people leave the business altogether, and will they end up with another shortage?
They could very much. You can only get laid off or fired so many times before you realize maybe this isn't where you want to be. And of course, we've had it happen a couple of times now within the last few years. So this just might be the straw that breaks the camel's back, where a lot of people just do not want to come back. They're going to say, they might have already moved on, is where we're at. They're at the point now where they got let go. They probably went out and looked for a new job, new career somewhere else, because they're sick and tired of going through this roller coaster. You just get rolling and then you get cut off again. So it could be very difficult to get workers back. You can only be laid off so many times and have a life-changing event that you can handle before you give up on that.
People in Toronto are telling me they're seeing a lot of Alberta license plates.
I can imagine. I've got a buddy who actually just moved from Alberta right to Toronto area. And he's still working with an oil company. They just kind of moved him over here, but there was no work over there, so they had to bring him back over here.
Chris, anything else you wanted to throw in?
Not really. I think the big kind of takeaway here is that I think the energy sector looks primed and ready to go. While the overall stock market, I think, is going to be relatively tough to trade, I think the energy sector is going to be a sweet spot. And I think as the market starts to break down in the coming weeks or months, then we're going to start to see the new opportunity in precious metals, and it's getting very close to starting. But that's about it.
Chris, thanks a lot for chatting with us.
Hey, it was a pleasure to be here, Jim. Thank you.
My guest has been Chris Vermeulen. His website, thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.